If you own an S-Corp and you're paying business expenses out of your own pocket without an accountable plan in place, you are either missing deductions or you're creating a tax problem. And most business owners do not even know this is happening. An accountable plan is one of the most valuable tools for S-Corp owners, and it is one of the most misunderstood. Today, I'm breaking it all the way down. I'm Sonya Moreno, tax strategist and founder of Sonya Moreno CPA. My work is about helping business owners build wealth through proactive tax planning. The accountable plan conversation comes up constantly with my S-Corp clients, and I want to make sure you understand why it matters and what to do about it. So let's get into it. An accountable plan is a formal written policy that allows a business to reimburse its employees, including owner employees, for business expenses tax-free. The last part's critical. I said tax-free. But without an accountable plan, if your S-Corp reimburses you for a business expense, the IRS can treat that reimbursement as additional compensation. That means it gets added to your W-2. You have to pay income tax on it. And then, depending on how it's categorized, payroll taxes could apply too. With an accountable plan in place, that same reimbursement is completely excluded from your taxable income. The business deducts the expense and then you receive the reimbursement. No taxes on either end. This is a significant difference. If you operate as an S-Corp and you're paying for any business-related expenses personally, so out of your own wallet, your personal credit cards, any of your personal accounts, you need an accountable plan. This is especially important for owner shareholders who are also employees of their S-Corp, which is the structure most of my clients are operating in. Sole proprietors and single member LLCs, taxed as disregarded entities, have a bit more flexibility because all business income and expenses flow through their personal tax return anyway. But for the S Corp owner, this is not optional if you want this done correctly. The range of expenses that can flow through an accountable plan is broad, and this is where the planning opportunity lives. Some of the most common, you have your home office expenses, which can include a portion of your mortgage or your rent, utilities, and then the internet. Vehicle mileage and auto expenses for business use. You can cell phone, the business use portion, business meals, travel, professional development and education, equipment and supplies purchased personally, but for business purposes. Here's an example. You work from home in a home office, right? And you use your personal phone for client calls. Under an accountable plan, you can calculate the business use percentage of your home and your phone, and then have your S Corp reimburse you for those amounts. That reimbursement is tax free to you and it's deductible for the business. Without this plan, though, those are the same reimbursements could cause a tax liability. The IRS has three specific requirements that must be met for a plan to qualify as an accountable plan. First, the expenses must have a legitimate business connection. They must be ordinary and necessary for the operation of the business. Personal expenses do not qualify, even under an accountable plan. Second, there must be adequate accounting. That means documentation, right? Receipts, logs, records of when, where, how much, and why the business purpose for each expense. Mileage logs for vehicle expenses, itemized receipts for meals. This documentation must be submitted to the company in a timely manner, just like any other employee. Third, any excess reimbursement must be returned. If an employee receives more than they documented as legitimate expense, the excess has to come back to the company within a reasonable time. For owner employees managing their own reimbursement, this is straightforward, but it still needs to be tracked correctly. Setting up an accountable plan starts with a written plan document. This does not have to be complicated, but it does have to exist in writing. It should outline what types of expenses are eligible for reimbursement, the documentation that'll be required, and then the process for submitting reimbursement requests and the timeline for returning any excess. Once the plan is in place, you submit expense reports to your company. Your company reimburses you, and then you keep the documentation on file. Some business owners, they process this monthly, and then I have other business owners who do this quarterly. The frequency matters less than the consistency. What the IRS wants to see is that you have a real system, not just reimbursements happening, informally with no paper trail. Work with your tax strategist or your business attorney to get the plan documented and a good draft properly. This is not something to download a generic template for and then just call it done. I want to be direct about why this matters beyond just the tax mechanics. S-Corp owners face a unique challenge. You are both the employer and the employee. The temptation is to keep things informal because it feels like you're just moving money around in your own world. But the IRS, they don't see it this way. They see two separate entities, you as an individual and your corporation as a legal entity. And the transactions between those two, they need to be handled correctly. So an accountable plan is part of operating your S corp with the structure and discipline that's going to protect you. It keeps your personal and your business finances properly separated. It also ensures that your deductions are defensible and it maximizes what you keep after taxes. This is what separates business owners who are building wealth from business owners who are just generating revenue. If you have an S Corp and you do not currently have a written accountable plan, this is one of the first things that I address with any of my new clients because it is the foundation to a clean, optimized tax strategy. If you want to get this set up correctly and make sure your S-Corp is structured to protect your income and reduce your tax bill, then let's have a conversation.